All right, all right. Welcome back, everyone, to another episode on how to construct your first $1 million portfolio. We have Sid Chase going to be joining us. He is our special millionaire guest. And last episode was so awesome. The comments came in and feedback came in that the information was valuable, it was timely, and all that great stuff. As you can see, I'm still working on my studio space with all my lights and everything. But nonetheless, we are going to move forward and make it do what it do. So we're going to bring Sid to the stage here. What's going on, Sid?
Hey guys, how you doing? I'm doing good.
Excellent, excellent. So for everyone, once again, this is Sid Chase, Sydney Chase. He is the pit bull to the noble bull to real estate author, also your guide, your no bull guide to making money with alternative investments, which he's going to talk about a little bit today in conjunction with the stocks that we're going to be talking about. And then also your daily dose of no bull. And you can find him at the Chase Group online to find out information for his coaching and or consulting and or just want to speak with him on some various topics. Such a great resource. Sid, are we ready to double back down on it?
We're ready, man. We're ready to go. Let's do this thing.
So, a couple things we'll cover today for our 30 minutes. Once again, each one of these episodes, everyone's going to be about 30 minutes long. Of course, Sid and I get to talk and we can go longer, but we're going to cover types of stocks, what percentage of your portfolio should be stocks as you're building your initial $1 million portfolio, how to know what to look for when you're investigating different stock options, shorting the market, etc. Um, when to do stocks, maybe versus U.S. bonds, as many of you may have heard about before. And Sid's going to double down, as I said, to some alternative investments as well. We're going to knock this thing out in 30 minutes for everyone. If you have a question or comment, you could put it in the chat. I'll be checking YouTube, I'll be checking Facebook, and I'll be checking LinkedIn for your comments and or questions. And so far, oh yeah, AC Andre C Hatchet says game time. Sure is. Appreciate you, Andre. Continued support. All right, so I'm gonna turn it over to you, Sid. Let's make it happen, Captain.
All right. So they can find the books either on Amazon or at sidchase.com. Those two places. And if you happen to be in Myrtle Beach, just stop at the farm store and I'll personally sign one for you as well. But tonight we're going to go over those stocks. We're going to go over futures market. We talk about a group that I trade with, not every morning, but a few times during the week I trade with them. And most of those guys are all futures traders. So if you're interested in futures trading, that's something that we'll cover a little bit tonight. Maybe we can do a separate show on just the futures trading alone. That's a lot of fun, futures trading. But what do we got for some questions? Do we got any questions yet from the? What do you want to go over first?
Nope, I think we're good. You want to start with some futures trading, and then we can go into stock, and then you can do your alternative.
Yeah, so I think one of the earlier questions that you had sent over to me that somebody asked, I think, was where do I start, right? So the first thing you want to do is you want to have your daily budget in order, your bills in order, your emergency fund set up, have a Roth IRA or some type of 401k or whatever it may be that your job is offering you. And what you want to do with that is just take advantage of whatever they're giving you for free, match that. The rest of that you have left over, it's disposable money, can go into a Roth IRA. You can use Schwab. Schwab has Thinkorswim, so if you want to use Schwab, you can use Vanguard. Those are the two that I would recommend. There's lots of other ones out there. If I'm long-term trading, like in my Roth IRA, for example, I would use Vanguard. because it's very easy to do. Once you get over $25,000, they'll actually manage your money for you if you want them to. If you want to go with Schwab, same thing. Their prices, fees are a little bit more expensive, but Schwab has Think or Swim. So what's nice about that is Think or Swim is probably one of the best platforms to trade off from yourself, right? So that's if you're going to manage it, you're going to trade, you want to swing trade, day trade, or long-term trade on top of your retirements. What I always did in the beginning, I kind of did my own, and then after I hit that $25,000 mark, I let somebody else handle it, and then I went and started another one, and I ran that one myself. But the two best bets there are Schwab or Vanguard. Now, if you want to do futures, you can do futures on either one of those as well. They're just very expensive. You can do futures on the AMP, which is one I use, and you can also do futures through Webull. Webull is a pretty decent platform. I would not recommend Robinhood or some of the other ones. Lightspeed is a good one, but you're going to pay for that. The ones I've mentioned are all free. So those are. I think
they said speak a little closer to the mic or a little louder.
A little louder.
Yeah.
So those Webull, Lightspeed is a great one. That's mostly for options and futures, but Lightspeed will charge you to use their platform. Webull will not charge you to use their platform. So that's pretty good. It's a little slow, but it still works really good. Plus, you can do some futures on there as well. So
now, when you're saying futures, can you define that for the audience that may not, they're just totally new to this? What do you mean by futures?
That would take up our whole 30, 40 minutes. Yeah. But I'll do the shortest version period. That's why I said the futures might want to be another class or another date. But in short, futures is something that whether it's gold, commodities, any type of commodities, animal stuff, pork, that type of thing, cattle, cotton, sugar,
oranges. You see that being traded.
S&P 500 you can do in there. You can do the Dow. You can do the NASDAQ. All that's futures. And what futures basically is you're getting a contract with somebody for, could be 30 days out, a month out. It could be whatever, but it's out into the future. You're betting on the future of whether you believe that commodity, we'll call it, is going to go up or go down. If you guys get a chance and you want to learn a lot about the futures market, one, you can talk to me, consult with me. I can go through it with you. The other way to do it is go check out Mighty Ox Trading on YouTube. I trade with those guys in the morning. It's strictly a futures platform. There's no cost to it. It's completely free, and it's a good place to learn.
Okay, very good. And if you want to add or switch out one of the episodes that we have coming up, if you want to double back on futures, we can do that too. That'll be fine. Because futures, I know, is a key. It's a good component to have in that portfolio.
So when you're building your portfolios, Jason, again, you want to have that emergency fund in case what happens. You're out of a job for 3 or 4 months. You want to be able to rely not on your credit cards or taking out a loan or family or friends. You want to have that 3 to 6 months of income saved up. And then after that, the next thing you want to do is get that 401k if the company that you work for offers it. Next, you want to do a Roth IRA. And then after that, I would say start your own portfolio of stocks. Then you can do real estate and you can do pure plays and things like that we're going to talk about throughout this series that we're doing. But in that, futures. Now, futures are better off doing that as a day trader, not so much as a long-term or swing trader. But but if you've got time to day trade in the morning, you could use futures to do that. I don't recommend so much putting futures into your long-term portfolio. When your long-term portfolio, what you're looking for is basically 2 categories of stocks, right? There is a third one. We'll cover that real quickly. But the first 2, you're looking for what they call dividend kings. You can just Google dividend kings or dividend aristocrats. they're going to pop up the 50 years of the Kings are the 50 years, and I believe the Aristocrats are 10 or 20 years that they've been paying dividends for.
Right.
And those are the companies you want to look for. That's where I go to look for my companies when I want to buy them as I'm building my portfolio. Also, I try to stay away from ones that are like 3% or less than 3% paying dividends.
Right.
There's some other variables that go in there, but I try to stay away from those, especially if the bonds or if the interest market, like my money market account right now, is paying 4.5%, 4.25%, 4.5%. So I'm not right now. I'm not real hungry to go out and look for adding new stocks to my portfolio, because I have to go for something that's 5% above. And when you start looking for those stocks that are companies that are 5% above, you start getting ones that may not be that great. There's a lot more risk to them if they're paying that much. They're trying to attract you into the Venus flytrap kind of thing. So you got to stay in that 3 to 4% range is what you're looking for. And there's monthly dividend stocks and there's quarterly dividend stocks. There's a few stocks that pay by the year. I would totally stay away from those. Most of your monthly dividend stocks are trash. So you got to be very selective there. And again, that's something we can go over if we want to do a show that's on monthly dividends only. We could run down through the top 10 or top 20 of them and show people what that looks like as well.
So would you say just stay away from the yearly ones altogether, or
I would.
the dividend stocks, they should have a greater portion of that strictly quarterly, and then maybe just a couple monthly, yearly here or there that they're not really heavily into?
You can set up your dividend portfolio in a bunch of different ways. So you could actually, every 3 months they're going to pay that out, right? So certain, like Coca-Cola will pay a certain month and out 3 times or 4 times out of the year. Pfizer will pay certain time out of the year, so on and so forth. So what you could literally do is as you're picking or building your stock portfolio, pick the ones that pay so that you're getting paid every single month. Right. Out of those top ones. Now, so that we don't necessarily have to go to the monthly ones. But some of the monthly ones are actually pretty good. So I like to have those in there. I was going to show up a portfolio that I have built over the last probably 5 years, 6 years now, but I couldn't get it to pull up for some reason, but that's okay. So,
So what's the right? So a question they had: what platform are you using to purchase your stocks, and where are you housing your stocks? For example, and this is not really a stock, but when it comes to cryptocurrency, there's a bunch of different platforms you can use, and you can log in and you'll see it right there. Whereas other people, which is actually a safer bet, is they buying it and they keep it on a disk, right? Portable disk, which is their own personal digital wallet. When it comes to stocks, is there a way to have your own digital wallet, or if you're going to Vanguard and you're buying stocks through them or something like that, it's always with them?
It's always with them. So stocks are not like crypto wallets at all. So once you pick your platform, whether it's Schwab, Vanguard, Webull, Lightspeed, it doesn't matter which one you pick. AMP, it doesn't matter. They're all brokers. So once you pick those, whatever one you're picking, when you purchase that stock through them, they're the ones that are going to basically hold that in like a purgatory kind of thing, like is what it's going to be. It's just going to be locked in there and it's going to be yours, so that when you go and look at your portfolio on Vanguard, for example, you're going to see how much you've lost, how much you've made on each individual stocks. And then as a whole, it's going to show you when you bought them, when you sold them. It's going to give you all the information you need.
Right.
Watch over what you're doing, but it's no wallet.
Okay.
And speaking of crypto, Jason, so on stocks, I look at maybe a 75. So if your whole portfolio is 100%, right, you get 75% of that may be stocks. In that stocks, you're going to have a little bit of gold, maybe 10%, 15% of that's going to be gold. And then then you might have some oil, you might have some pharmaceuticals, you might have some consumers, you might have some producers. There's a whole section. I can go over that with somebody to kind of round your portfolio out. But you definitely want to have some. I'm not a big fan of bonds at all, zero. So I do have one portfolio that I have that does have a few bonds in them, but I'm more, if I'm going to put my money to store it somewhere, I might as well just leave it in cash in a money market account that's going to fluctuate with the interest rate and pay me more, instead of tying it up and all of that. So that way it's available.
Right.
It's available when I want to use it. That I would kind of stay away from the bonds.
Okay. And a question we had to come in is, what are mutual funds, and are those no more than pre-packaged stock kind of combinations or themed stocks?
Yeah, so mutual fund is the time of Caesar. That stuff is over with and done with. So don't even mess around with mutual funds.
Yeah.
Now, look, if you're in a 401k, they may force you to do mutual funds. So your company,
Right. And I think that's what they were. That's where they were leaning to, is that they're
yeah,
company sponsored 401k.
so if it's there, you got to do it. You got to do it. I get it, right? Because you want the free money, right? So just do it, and they'll pick the stuff probably. But if you're doing a portfolio on your own, or if you're going to do it through Vanguard or Schwab or somebody like that, you'd stay away from your mutual funds. They charge you too much money. Just so you know, stocks don't charge you money to own them. Mutual funds charge you the most usually. ETFs will also charge you to own them, but it's because they're not regulated. Well, they are, but they're monitored most of the time. ETFs are, and so that's why they charge. Mutual funds definitely are, and they're old school. They charge way too much. Like I said, I wouldn't mess with them. Your stocks aren't going to charge you, and what you're looking for is stocks that are going to pay you to hold them. Look, we don't care if the stock goes up or down. At the end of the day, long-term trading, we don't really care. What we care about is that every single month or every 3 months, it's going to pay us a dividend, because we're going to buy it when it's down, and we're going to wait for it to come back down. I'll show you some things again on the charts later, how we do that. But there's different ways to buy in, but I would definitely, different levels to buy in at, or different strategies to buy in at, but I would definitely stay away from mutual funds.
Okay, very good. Now, you said you weren't able to bring up your chart this time, but we can double back on it next time. So we'll get back.
I'll actually do that next time. Yep.
Okay.
Yep. The wife had me cleaning up too many chicken coops today. I didn't
have
time for
it. That's so funny. All right, let me go back to the next question we have here. So we asked you about the platforms. We quickly went over the various different types of stocks, and how to diversify that. Shorting the market versus holding or increase. So generally,
so when you're building this portfolio, when you're building your portfolio and deciding what you want to do you want to day trade? I day trade not every day anymore, a few times a week. My day trading portfolio, I've already maxed my goal for the year. So right now I'm trading maybe once or twice a week, even if that. And if I get a win, I'm done already for the day. I don't mess around. I'm not interested in losing anything. So there's a portfolio for day trading, there's a portfolio for swing trading, and there's a portfolio that's long-term. That long-term portfolios can be a Roth IRA, a 401k, or some type of government pension, or whatever that may be. But what you're looking for on your own is either the Roth, the 401k. The 401k, they won't let you manage. The Roth, you could manage, or you have your own. And when you're building these portfolios, like I have a portfolio that is nothing but day trading. Then I have one that's swing trading. My swing trades can be any stock that I'm interested in after I look at the charts, and I look at maybe 20 different ones. I don't go all over the place crazy, but I keep 20 in my pocket, and those are the ones that I'd like to swing trade when they hit certain points on them. And we can show some of that tonight if we have time. And then the long-term ones, we're not really interested in selling those, unless we want to rebalance at the end of the year or something. But again,
Mhm.
it's a portfolio that you're running, somebody else is running, or your Roth IRA or your 401k. So there's different ways to look at it. But I have a portfolio for gold. I have one for short term. I have one for long term. It just depends what I'm looking for. For me, the other people might be more organized, but for me, I like to keep my portfolio separated out so they're not all confused in one sheet.
Okay. And when it comes to the portfolios as people are building them, what is one of the strategies that you might suggest they investigate towards building a portfolio that's going to give them access to funds as they're getting it up to $1 million portfolio?
So, well,
And that could be either drawing funds from them, your dividends pay out monthly or something like that. So we got that.
yeah,
But is there something that they can draw from? Of course, with your 401k, there's rules and regulations on that, but that
yeah.
makes accessible to them at least some amount. So what would you suggest they investigate on that?
Yeah, so there's no magic balloon out there that is going to bring you in money tomorrow, right? Unless you put in $100,000 or something like that, right? So if you put in
Right.
$100,000 and to Vanguard's money market fund right now, and it's treating 4%, you can do the math. That's what you're going to get a month, right? So
Right.
what Jason's talking about is something that's more long term. So you've built this over the last few
Exactly.
years, right? If you're looking for now money, you would have to do day trading. Day trading, and again, day trading is not easy, folks. It took me years to figure it out,
Right.
and then that was me trying to do it more on my own. And I should have just went to somebody that I trusted and learned. But anyways, that's that. But you want to build these portfolios over time. All of these portfolios, whether it's real estate, buying properties, flipping houses, your gold is definitely going to be more long term unless you want to trade it during the futures market.
Mhm.
Oil, movies, farming, 401k, all of this is more long term stuff.
Exactly.
You need to keep working or doing a side hustle until you get to that point where you're making enough on those things and you're up there. And it's a much longer discussion and strategy based on where that person is right now for me to really give a good answer, because my answer isn't going to fit everybody, but there is an answer for everybody.
Yep. Exactly. And looks like I need to grab the battery from my laptop. But I'll ask this next question, then I'll plug it in. So when it comes to, and believe you mentioned it before, your suggestion that they investigate is a portfolio that has 75% of your $1 million portfolio is accounted for with your different stocks and diversity of stocks that you have. But you think stocks should cover about 75% of that?
It comes down to your risk factor, right? So it comes down to risk. It comes down to your age and where you're at in life. How much money do you have? How much real estate do you have? How much gold, silver? Do you own a business? There's a lot of other things that um, are involved in that, making that decision. But if you're working your way to $1 million, if that's your goal, right? And it's about personality just as much as it is anything else, right? But you the stock market is a lot of times where you can make the money the fastest, but it's also where you can lose your money the fastest. If you're flipping, like for me, for example, yes, I started out doing stocks when I was 18, 19 years old, and I was doing mutual funds way back then. So this is 40, oh my goodness, 40 some years ago. So but moving forward, I thought if I look back on myself, I made the most amount of my money, the quickest amount of my money when I was doing flipping houses. That was the fastest for me. I mean, I was flipping houses once I got rolling. My second year, I was doing almost a house a month, and so you don't want to go into all the math here. I could do that on a private consult, but that's a lot of money. And that's how I did it. And then I took that money and then I started flushing it into the big stock market, and I started building businesses, and I started buying other businesses that were already built, and I started buying gold and silver, and now I bought a big farm here, and so for me, it was real estate that triggered that cash the fastest, not so much
Right.
the stock market. Now I can make a good amount of money in the stock market. If you guys come in and watch Mighty Ox trading in the morning, and I happen to be in there trading, I'll tell you how much I've lost or how much I've made that day. But I've realized that that's not always a given, right? I know my real estate is a given, and it's slow, it's easy, and most 95% of the time, I'm not going to lose money in the real estate market. Where in the stock market, I don't always control that, and the emotions that go along with that. So there's really,
Right.
it comes down to each individual's personal self, their character, their how they handle stress, and all of that, and where they should start. But like I said, and I'll repeat it again, definitely start with the emergency fund. Definitely start with either a 401k or a Roth IRA. Those are the most first things you need to do, no matter what age you are.
Yep. And to let all of our viewers and listeners know, I will be putting together a guide, if you will, some type of content deck, so that you'll have the notes and all the gems that Sid is giving us throughout this series. Also, to want to reiterate something very important Sid said is that you have to first think about your timeline. You can build a $1 million portfolio, but what is the timeline that that you really desire, and is your timeline realistic? Now, if you're 20 years old and you're building a portfolio for you 65 years old, okay, that's the longer play, right? You have time, and you'll probably have a portfolio of multi-million dollars, right? Um, but if you have a shorter time frame, or you're looking to generate cash flow, you want a portfolio that's generating cash flow, then you're going to look at real estate, as Sid was saying, and where you can buy a whole, start generating cash flow from taking in tenants and your rent, and then borrowing against the equities of that. And, it just repeats the cycle, rinse and repeat after that. So,
It also depends on where the economy is in
yep,
its cycle,
yep,
right? So
most definitely.
you may say, hey, Sid's got a great idea. I got 100 grand. I'm going to go out and buy 2 or 3 flip houses right now. Well, folks, unless you're buying in the very poor and bad areas where you would not want to live, there's really no good flipping going on right now. There hasn't been a good flipping um, flipping houses probably for the last 4 or 5 years.
Right.
It's just they're too expensive to try to flip right now.
Yeah, to
And the
try to
banks
flip.
are the
Now,
banks are
if you were buying and holding, I know in Charlotte, because some of this is also the location that you're in,
correct.
right? You're saying, okay, how's the market, but also location, because we have so many people moving to Charlotte, like every single day. So it's not the best market for flipping, but it is a great market if you can acquire the homes to rent them out, because the rents,
Correct.
they're not skyrocketing up, but with each new lease renewal, you're able to generate a little more cash flow, a little more cash flow. Um, the equity is still going up. It's not skyrocketing like it was,
Correct.
back in the time where, I mean, man, people were buying houses unseen, sight unseen.
Oh yeah, I know.
It,
I know.
it was.
Yeah. So right now, though, I know we're on the stocks, but let's just talk about real estate. So if real estate is something you go, hey man, that's what I want to do. I've already got all my other portfolios going, and now I'm ready to go to real estate. The thing to do would be either what Jason has said to do, or the other thing is get with a builder who's willing to build you a spec home that you can
Right.
buy and then resell. Right. So I do that with my investors. I build them spec homes. They put up all the money, and then when the house sells to the new people that are moving in, they're the ones that's getting all the money, and I leave them enough money on the table, so I'm giving them a cut off, off of mine to give more to them. So those are the two things that I would be interested in doing right now if I was going to jump into the real estate market.
And I was thinking about. I'm always thinking about the content that we go over. Specifically, I really like and I'll call it the survivor's chest. that you demonstrated on the last episode with having actual gold and actual silver, and then the surprise that you had everyone there. And I was thinking, in real estate, would I consider buying just a really cheap, don't go expensive at all, find the cheapest one you can with some utility, a lot. Just buying some little piece of land
Yeah.
that taxes are really low, that you can get for super cheap. And I call that, and you can correct me if I'm wrong, that may be a good thing just to have, especially if the yearly taxes are cheap because you haven't built on it, as your in your survivor chest.
Mhm.
Because if you just need to go put up a tent somewhere
Yeah.
and have a campfire, then buy you a lot with no HOA that you know isn't infested with snakes and crazy stuff. But
Right. Yeah.
maybe should people keep a lot in their back pocket, you think?
Yeah, so that's fine. That's a a prepper's mentality. So that's what that is. But let me take that one step further for you, and let's call that land banking because that's what it is, right? So it's land banking. So that's a
Right.
whole other portfolio that you can go out and purchase land, the cheapest taxes you can find, right? And you got to keep that balance to make sure you can make that payment every year for the taxes. But it's called
Right.
land banking. And in the short version of how to do that is you figure out what the county's going to do on their next 5-year plan, 10-year plan, and a 20-year plan. Almost every county
Exactly.
has that, right? So you go
Exactly.
out and you look at those, the public information, and you go, okay, so I'm looking for property over here because they're thinking about doing commercial over here and residential over here. And so it might be, a 3-year wait. It could be a 10-year wait. Heck, it could
Right.
be a 20-year wait. I
Right.
don't know. But I do know that I don't land bank it anymore, but when I did do land banking, I kept properties for 10 or 15 years and I never lost a dime. Never, ever, never
Right.
lost a dime. Right.
And I,
Yeah. And another good time to do land banking, and then we'll get back to the stocks, but is back in '08, in '09, in '10, or no, '10, in 10, and I think there was one in the '70s, and then there was another crash in the '90s. That's
right.
when you want to land bank right there. That's when right now, what you're trying to do, guys, is go to the stock market, build your cash flow up, and just start packing that money away. Not with your 401k, your Roth IRA, but with your private fund, your private portfolio. That's what you're doing. Right now is not the time to go out and land bank. Now is not the time to maybe start a brand spanking new business or something that's got a lot of money invested. Right now is the time to keep doing what you're doing. Put that money into a company that's going to make you money every month, every quarter, whatever it is. Maybe get with a builder who's doing spec homes so that he can tell you, hey, it's time to stop doing this, right? Because you're not going to know. You've never done it before. But now's the
Right.
time to keep putting that money away, keep putting it away because the next market crash is coming. I guarantee you it's
Oh
coming.
yeah,
It
for
will
sure.
be there. And that's when you need to take the opportunity and have all that cash that you've been saving as much as you can, whether you put it in gold, whether you put it in silver, whether you put it in cash, whether you put it in the dividends, doesn't matter. Put it away for that time. Remember, preparation meets opportunity breeds success. Period.
And that leads to the next question. So that was a good segue, and then we'll wrap this session up. Uh, some of the concerns that people have expressed about stocks is, Jason, well, what if the market crashes? Or what if a company that I'm buying stocks in bellies up? And what if a company um, is a safe bet, but the company's always losing money? And one of the examples they gave was Amazon. So technically, Amazon, right, has
First,
been losing money for
First of all, Amazon is not a stock that you would purchase in your
that's what I thought.
portfolio
Yeah,
or dividend, right? It's not
right.
really a dividend stock.
Not for
It's
dividends, correct.
that Amazon is a stock that you would either day trade or swing trade. It's not something, if you'd have bought it 10 years ago, okay,
That's
that's
different.
different.
Right,
But
right.
still, you'd still be holding it. So it's a different story, right? But what I would say, um, how do I want to say that? Say that again to me. What you said about
Yeah.
Amazon.
So some of the apprehensions about
Yes.
stocks,
Okay.
because people don't know
So
about stocks because of the
yeah.
market crash.
So I want the market to drop. Right.
Because you
So
can
now
short things, you can
there's
be
people out there that don't want the market to drop, right? Because they're in their 65, 67, 70, 80 years old, and their income comes from, or let me rephrase that. It's not their income. That's what they kind of get goofed up on. It's their wealth, the big
correct.
picture drops. So if the market drops, and I'll show you a chart real quick here. If the market drops 35%, the value of their wealth drops 35%, right? But if they have core stocks, either the Aristocrats or the Kings, that are paying those dividends, they've been paying them for 10 years, 20 years, 50 years, who
Right.
cares if it drops? You're still getting paid the same amount of money by the dividend. The dividend's not changing, right? Your wealth overall, right, is
The overall
shrunk
wealth
down,
number,
but the
right.
volume of shares is still there. The dividend is still there, so you're still making the same amount of money. It's just your net worth's not the same. So there's really no reason to panic, right? So if I'm buying Coca-Cola, for example, did I bring that one up here? I did not.
Yeah.
That one up here. Let me.
You can bring it up, and then when you have it up, I'll see it and I'll add it to the stage.
That it?
All right. So let me bring that to the stage, and then we'll wrap this up about 3 minutes. All right, there you go. Yep.
Okay, so this one's Tesla, and I was going to show you that, but let's just go to Coca-Cola real quick. Should go. Why didn't it go? Huh, it's not changing for some reason. What the heck? Did it change? It did not change. I don't know why it didn't change. Okay, for some reason it's not. Let me try to recycle it. Hold on a second.
And while he's bringing that up for our listeners and viewers, we will be back in 2 weeks. We do this on Wednesdays every other week. We should be good to go for 7:30 p.m. Eastern Standard Time for the rest of the episodes. We had to shift it today because, as you can see, I'm wearing my Charlotte FC hat today. It turns out we had a Wednesday match. So I'm a supporter of the Charlotte FC for the crown, baby.
So here we go. Here's Coca-Cola, right? Now I went back to 2020. Here's your COVID dip right here, big dip right there, right? So right here's where you were before the COVID dip, which is a high, right? If you go back, that takes us to 2015, 2015, holy smokes. We just keep going back, right? So in 2022, that's just arrived. There was your peak at $60 basically. And then you had the big COVID drop. Now, most people panicked and started selling. Me, I went in and started buying, right? Because what I did is
because it became cheap.
That's right. It became cheap. So I wanted to buy more shares. So I wanted to buy more. So I just kept, I don't remember how many I added, like maybe another 400 or 500 shares to the portfolio for that. And I bought all the way down. I bought in here some more. And now I'm back up again. But I'm not worried about my how do I want to say it, my equity value, or what the stock is worth itself, $69, $71, wherever it's at right now. I think it's at $69.27. But what I'm concerned, what I want is I'm building that dividend. So I added those 300, 400, 500 shares that I got. I want to say it was 400 something. And that thing's now paying me even more, right? And if I remember correctly, real quick here, I think Coca-Cola, I'm not going to find it real quick, but Coca-Cola is paying like 2 or 3% interest, right? And you go, well, that's not very much. I could go do this or do that. Well, guess what, folks? When you have 2,000 or 3,000 shares over 3 or 4 or 5 years or 10 years, whatever it takes you to build that's big money, and it's coming in all the time. So don't worry about the stock dropping. Worry about if the stock's cuts its dividend, right? Cuts it out completely, or if it just cuts it like from 25 cents to 20 cents, okay, now I need to rethink what I'm doing, and maybe I need to get rid of this stock and go find another one. That's when you want to get rid of a stock.
Gotcha.
So in
all right,
short,
Sid, I think we're good to go on that one. We may like I said, double back on some futures. And
Yeah, and
then
if you get a bunch of people that want me to go over cover stocks with them, all I just need to know is what the symbol is, and we could go over as many as you
okay,
want that night.
I'll put that out there too, to cover stock. So we talked about on the last episode, planning that question and answer
Yep.
session and things like that. And I think we'll get more questions as we continue to cover more topics for the overall portfolio. Um, but yeah, they're definitely coming in. And when you send your questions in, I am keeping note of it. I'm recording it. And if it's something we can answer, oh, it pertains to the upcoming topic, then I'll do that. Or we will resubmit that for the question and answer portion too. But yeah, I like to keep these short and sweet, and plus Sid has a farm farm to run over there. But yeah, Sid, anything else that you want to
No,
say?
no, it's just
I think that's a great start for people who are just starting, and and
yeah,
even
just
for the
to go
intermediate.
back, just make sure you have your emergency fund, get your bills in order, get your emergency fund, get a 401k, get a Roth IRA, and then work that first Roth up to $25,000, and then let them manage it. Then let's go out and start another portfolio, right? And do it again. So, and then that one you're gonna run, and then work in your silver, work in your gold, work in your businesses, work in your movies, and all the other things that we can put together for you that you should be
Right,
putting together. Because remember, at the end of the day, right, your goal by the time you pick your whatever that retirement year is, 35, 45, 55, 65, doesn't matter, whatever that time is, you want to have at least 7 streams of income coming in that totally replaces the one you're actually going to go into retirement making more money than you are now.
right. And I'll reiterate for everyone in Sid's book, "You're a Noble Guide to Making Money with Alternative Investments." Bring up the table of contents. He has 8 right there. Let's give me 9 right there. You see that, guys and gals, right there. So Sid said it at the millionaire dinner, and we're looking to do that in October again. I'll be texting you about that. I'm just waiting to confirm the date, but he said it during our millionaire dinner. He said it oftentimes on the podcast, on other episodes. You want to have 7 streams minimum, 7 streams of income, and I like that because you're diversifying your streams. Some are going to be the short play, some are going to be the long play, some are going to be the mid play. And when one is doing well, the other may be seeming to kind of lag a little bit. But if you have that, you'll always be generating cash flow for yourself, and you always be putting yourself in a position where you can have access to assets, so that you can liquidate this or that. But key point, if you think that the market is not going to have its big dip coming up soon, you're in error. What can you be doing now? Putting things in place where you can have access to cash. You need to be cash
That's
rich.
king.
Yep, cash is king, because when the market goes down, things become very cheap, and then that's where you can cover a lot of ground. So for those that are older and are thinking, well, I wish I didn't, I wish I had started this 20 years ago. Hey, your opportunity is going to be coming. So get your cash up, get ready, because you'll be able to cover a lot of ground when the market adjustment occurs. Right, Sid?
Yeah, and I'll leave everybody with this note. If you
Mhm.
if you want to find a place to put your cash, just either do Schwab's money market account, Vanguard's money market account. Webull has
Yep.
one as well, but those two are safer. Put your money in there, earn your 4.5%, 5%, whatever it's going to be. It's better than the bank. You're still going to be able to get to it. You will pay capital gains on it, but it doesn't matter. But just do that. That's the safest place. Put your
Mhm.
cash in one of those two things and just let it roll. Let it roll, let it roll, let it roll, let it build up until the opportunity presents itself.
Most definitely.
And just so you know, on the farm,
Yeah.
I
Yeah.
also have on the farm I have 7 streams of income.
Yeah, but we talking about all the different types of animals and
All these
services you
different
have.
animals,
Yeah,
different types of all of that. I
because you
do the
have an
same
equipment
concept on the
rental,
farm.
you have the chickens,
Turkeys.
Are you doing your butchering now, or are you still outsourcing that?
We're outsourcing that, but
Okay.
our 7 streams on the farm are the store, multiple different
Right, the
items in
store.
the store. We got the
Right.
cows, we got the pigs, we got the turkeys, we got the chickens, we got goats, we got lambs. That's 7 right there. There's more out there.
Right. And you have the equipment rental as
That
well.
is correct.
You were telling me about. So yeah.
Yep.
I think that's awesome. And this is, I know this is valuable to all listeners. So once again, thank you, Mr. Sidney Chase. You get his book, The Noble to Real Estate by Mr. Sidney Chase. You can get this at sidchase.com. You could do it on Amazon as well, but go to sidchase.com so you can see his other products. Also, Noble Guide to Making Money with Alternative Investments, and then your daily dose of Noble, which gives you great quotes, thinking points, but you also have a lot of area there to write down your thoughts and journal. All right, Sid. So we'll be back in 2 weeks, ready to go at it again, sir.
All righty. I appreciate it. Y'all take care.
All right. Tell the wife I said hello.
I will.
All
See
right.
ya.